Hey traders, today is Tuesday, January 27th, and I'm Michael Boutros, Senior Market Analyst with StoneX here for a quick multi-time frame look at the dollar yen. Making a lot of headlines recently with this big move. We're poised for a second consecutive weekly decline, nearly 4% off the yearly high. There's a lot of headlines circulating around this move. Last week, you got reports that we were seeing a rate check from the BOJ to see what rates they would get if they wanted to intervene in the markets. Over the weekend, you had commentary from Mimura suggesting that they're keeping close contact with the U.S. with regards to FX, and sort of theme of a possible coordinated intervention seems to be circulating. Now, it looks like the markets are doing the heavy lifting for the BOJ at this point, but we have turned off of last year's highs. 158.88 was the registered high that we made in January of last year. We've turned around from that, and that pullback is now probing and testing uptrend support, extending off the lows that we made back in September. So if we were to break here, it would suggest that that near-term multi-month uptrend has broken and the potential for a much deeper washout. Now, the implications here, the commentary, is that you could potentially see a larger unwind of the carry trade. Carry trade, obviously, the interest rate disparity between the two continues to favor rolls on the long side. But in light of what's going on here, and certainly with the interest rate paths of the BOJ looking to hike rates and further cuts from the Fed expected over the next couple of days, we do have the Fed interest rate decision on tap, obviously tomorrow. And then later in the week on Thursday, we get some more CPI data out of Japan. So the focus is on what happens near this support here. Here's what it looks like on the daily chart. First of all, before we move off, we had some pretty serious divergence on that last high we registered into the start of the year. Price registering a new high, the oscillator failing to register a new high. So sort of an exhaustion turnaround is what the onset of the turn looked like, but it might materialize into something much steeper. Here's the daily chart to show you the severity. We're now in the third consecutive day of the decline. Like I said, about 4%, 3.94% off the highs at this point for the month. That decline probing pitchfork support from that September low, but also if you take a near-term view of just the decline off of the last high-low high, it also has the lower parallel right there at the November low day close. So the day that the low was registered, the close of that session was 53.42. We're there right now. So you have a confluent downtrend support right being tested into the start of U.S. trade, Fed tomorrow, inflation data out of Japan the following day, looking for a reaction here. Now, initial resistance does give you that 155.57, 155.39. That's the December low day close. So again, the day that the low is registered in December, the close of that session, and a basic 38.2 retracement of this most recent drop. So nothing fancy, pretty simple level. That converges on former 25% parallel of that upslope. So if dollar yen is heading lower on this stretch, rallies should be limited to that region. Ultimately, you need to break through the median line, basically 156, to suggest that a more important low is in place and the potential for the resumption of the uptrend. That being said, the risk is still lower below 56 on a technical basis here in dollar yen. Now, if this breaks, the first level of support comes in just below 52. We got 51.98 into 151.94. Beautiful level. It's the 38.2 retracement, the advance off last year's low. It's the 2022 objective swing high, the 2023 objective swing high. Really nice pivot all throughout 2024. That level converges right there, right below 152. Key support would be just a little bit lower. You got the 200-day moving average, you got the 50% retracement, and you've got those September high close. Nice pivot region on that breakout that we saw last year. So the levels are pretty well defined. We are now testing a key support pivot in dollar yen today with major event risk on tap over the next couple of days. Here's what the 4-hour chart looks like. Again, just to clean things up, get rid of that longer term slope. You can see the nature of this descending pitchfork formation. Some reaction here, and we're looking for inflection off that zone. The weekly open extends into 55.69. So 55.35, 55.69 is the larger zone of resistance you'd like to see hold on any recoveries if dollar yen is holding lower. Again, 56 comes in right around that median line. That's going to be the key level to watch. Some interesting dynamics. And again, the storyline here continues to unfold. The plot thickens day by day. Just on a side note, if we look at what's been going on in gold and Japanese yields, here's the overlay of the chart. And basically what's that saying is that you're seeing investors pull out of government debt and really just load up on into gold, right? As yields go up, prices are going down on the government debt there, and gold is moving in tandem with that higher. It's like an anti-fiat currency type of trade. So you're seeing all of these concerns start to rise while you're getting these intervention talks coming in. The Fed is seen cutting rates. The BOJ is seen hiking rates. And it's just a recipe here for a larger move. So keep your eyes targeted on that 53.42 level over the next 24-48 hours. As always, we'll try to keep you updated on MB Forex as we get through the Fed interest rate decision and the commentary that follows. No expectations for a move. In fact, if you go into Fed Fund Futures, just a quick update, the first interest rate cut isn't really priced in until June. Even the April read is still around 74% that we're going to see the Fed hold on rates. It's not till June that you start to see it above 50%, 60% priced in that we're going to get at least 25 basis points. So the devil's going to be in the commentary here as we get through that Fed rate decision. And as always, we'll try to keep you updated. I have some more updates for you on X, and I will see you tomorrow morning. Best of luck trading, guys. Cheers.